This is Martin here from seekedge, the channel for learning about trading and investing. Welcome to a new episode of the weekly technical analysis on the markets. So we're going to see the markets for next week. That's starting from August 16th, Monday 2021. So if you're not subscribed to the channel, hit the subscribe button and share it to your friends for sure. That's the only way you can keep motivating us to keep doing this every week, every day, with more valuable content, and it doesn't cost you anything. Thank you so much. So what happened in the market last week? What is the price action, the pattern? If you just analyze, you can see that there's a wide range bullish green candle. That's what happened in Nifty, and it hit an all-time another all-time high at 16,500 above. Right, nearly 1.3% of bullish green candle was seen on the Bank Nifty, and Bank Nifty broke the 36,000 clearly. Right, it was not broken for the last 25 weeks. Right, so that's what happened in Nifty and in the indices basically. So the Nifty broke out of 4-day long consolidation after the initial previous week breakout, and then it made a 2% up move. Well, Bank Nifty also did good move, and but it later gave up 0.5% of it. So the latest Nifty candle, you can see that there is a 1% wide, one single candle on the Friday. It's a 1% wide bullish green breakout candle pattern that you see. It indicates that the bullishness is to continue, right? Bank Nifty, the latest candle of the daily, if you see it's again, it continues to be, it's green bullish, but it continues to be inside candle because there is a 2-day old bigger bearish candle that's there. So after the previous week's breakout that happened, there was some consolidation, and it is still not come out fully of that consolidation. It ended the week with a green, right? So the bullishness prevails there, right? But not as much as Nifty is showing on the charts, right? Now Nifty has a volatility expansion that can clearly seen on the Bollinger Bands, but Bank Nifty, the expansion has started but not clearly moving up on the bands. You can see all these details in the charts in the next screen. So this is the daily candle on the left side. What you see is Nifty 50, right side is Bank Nifty. You can see the bullish candles that you see there on the daily, right? It broke out of a triangular or rectangular kind of patterns. Nifty closed, is still an inside candle inside the big bearishness that happened 2 days back. But so that's what it is, clearly showing. But weekly basis, if you see, it's a bullish wide range candle from left in Nifty, and right also you can see a green candle, not as big as Nifty on the Bank Nifty, right? Bollinger Bands clearly showing expansion from the skews several weeks, right? Here also expansion started, but not as visible clear as Nifty, right? So Bank Nifty volatility is going to catch up. Support resistance level 16,350 is the, can you believe it? 16,350 is the support below, right? And below that you have 15,850, 950, where it was hovering around for so much time. Then further below that it is 15,500, where it dipped several times, and levels. And resistance upwards is now 15,550, which is the projection, 50 projection from the last swing. If you see, Fibonacci 5th projection. Second level now it is 16,840, 50 kind of levels. So that's the range. So you're heading towards 17,000 as per the charts. Now Bank Nifty, if you see, it's the support is still it's not too far from the previous distance. It's at the support area of 35,700 to 35,900. That is the immediate support. And below that you have 34,400 to 34,700 support, which is again matching with the Fib 23. Previous swing low levels there. So 33,500 and 32,850 is the further below. You will see these levels on the charts later. But resistance supports nowadays, as per the charts, is 36,000 and 36,500. This is the previous resistance, which is 3600 is closed, but the band of 36,500 to 36,500 still remains as a resistance, the entire band, where it was hit and come back several times. It's previous resistance, and above that you have the all-time high 37,700, which has to go. So these two levels of previous resistance has to be broken by the Nifty. That's what it is clearly saying. This is what the chart says. No, see, it's all-time uncharted area that we are. We did a projection of 61% 800, which is coming to right. Yeah, actually this 61%, not 50 as it was mentioned. So projection 61 is where we are. Beyond that it is 850, which is 70, next levels, right? Bank Nifty, you can see that the resistance area, previous one, is still not broken, right? And then upward you have again another resistance up here at 3600. Momentum clearly bullish on all time frames, daily, weekly and monthly, on Nifty and Bank Nifty. No divergence. Ready extend indicator bullish and rising, right, on Nifty, right? Bank Nifty, it's bullish, but it is not rising in the strength of the indicator, right? And all other time frames continue to maintain the bullishness in the trend. So momentum and trend very good for both the indices. You can clearly see that momentum is up, bullish zones, Bank Nifty catched up, and then it is also up. No divergence. This is a trend indicator is bullish and it is rising the strength. Here also it is bullish, but it is not rising, it is still in the down mode. So the trend is not as great for Bank Nifty as it is for Nifty. VIX levels, you can see that VIX was more or less flat, ending at 12.9 level. Same, nothing much happened here. Open interest rate, if you see, 16,400 is the highest put rating. At 16,300 also you have put rating. And the resistance is seen 16,800 far away, somewhere matching with the projections in the charts were saying. 17,000 is the next projected open interest. The put call ratio is 1.67, clearly bullish. Future open interest build-up is showing long build-up, bullish. Bank Nifty 36,000 and 34,500 is where the support ranges are. Resistance seen as 36,000 and 38,000, right? So put call ratio is not as bullish as it is in Nifty. Bank Nifty 0.97, right? So the VIX is flat, and VIX HIV, the IV implied volatility is greater than HIV, but IV levels increase slightly, but still at very low level of volatility. So this is what the open interest started for Nifty and Bank Nifty. Left is Nifty and right is Bank Nifty. You can see that clearly bullish chart on all put trading only, hardly any call trading. Here also clear bullish chart because highest is put support at 36, right? Sectorial IT index moved up nearly 5% again. So IT is what is clearly holding the Nifty, right? So still there is a bullish weekly moment. You have to be cautiously bullish, but it's clearly bullish, heading strong and strong as the dollar strength increases. FMCG, slight improvement was there, but it formed a dragonfly, which is uncertainty, and there is also a weekly resistance which is a tract. So you have to be cautiously bullish there. Metal was moved, but was bullish, but formed a flat hammer pattern, bearish, right? But it is in the bull zones. So there is momentum also that is there. So it will be bullish. So first three, IT, FMCG, metal, bullish with caution. Highest bullishness is in IT, then FMCG, then metal. Auto sector flat or bearish, you can say, consolidating patterns. Pharma has gone into sideways, right? Bearish candles, and bearish divergence seems to be working, and it's not in the bullish. So auto and pharma stay away. Metal, FMCG, cautious. IT bullish, but still be cautious. The stock picks for the next week: two, Larsen & Turbo, L&T. It is having a rounding pattern, right, which is already broken out, and now it has formed a further W pattern which also has broken out. It's clear bullishness. Which tight stop sources at this break, the neckline of the rounding pattern, you can trade for swing. Tata Consumer Products is the second one, which is in a channel and making higher high, and it is clear breakout from the previous resistance zone, which was tested 3 times, and it's it's clearly moving up. More details on stock picks can be found on the Twitter account that I have, right? So you can check for @mpulse and then see the Twitter handle and then get more details. Now institutional participation, you can see that 850 crores of buying is what happened net in the week last week by the foreign institutions, and Domestic institution also bought 600 crore. That is what created the big buck move. Net longs derivatives are flat. Now the global markets, if you see, US markets all cross green. The S&P, Nasdaq, Dow Jones all are flat. Okay? Well, the Nasdaq has got a doji kind of finance on it depend. It had moved up previous week also. It had recovered from and moved up. The dollar index actually weakened a little bit. You can see a bearish candle, right? It has taken support, right? And there is a W pattern that's where it was heading up to a neckline of that, but last week was bearish. Crude oil went below 70, which is a good thing. US dollar currency pair is formed a doji candle. You can see it on the top, right? Uncertainty, but it is at major support zone. It's not slipped from that, right? It hit the channel top and then hovering around. It seems to be consolidating around here, right? And dollar, we can see also dollar major thing is a 5% of down move happened and then recovered the entire 5%. You can see a clear bullishness in this. There are a lot of bulls in this. So it slipped from a major support zone. 5% of move. It happened in 1 or 2 days, and then immediately recovered it back. Right. So yeah. So it's it should continue to head upwards is what we have to assume. Right. When the dollar strengthens, the sudden crash of gold happened. But no, the buyers are still there at this bottom level, and it shot back. No? So gold continues to be the inflation hedge, right? So VIX levels 2.9 levels. So whatever actionable that you are doing, it has to be very positive because spikes are can be difficult to trade when you are doing non-reduction strategies. So this is one strategy from options, which is double diagonal counter spreads. It has got 80% probability. Alright, it's a 1 week trade, and risk reward is also fine, and margins are well less, and high probability is high of getting that. The range. Look at the range. It is a very good range. So the assumption here, the view is that it will not break 37, right? Even if it makes a up move and downside. Since it has crossed the 36,000 level after so many weeks of hitting at it, it's not likely to go below 35,500 levels is assumption. So that range is what this is there. Reasonable risk reward. If you're going for multiple lots, you can make more profit also, but it has to be purely on your discretion, capital, risk management, everything of your own, right? This is just a educational recommendation, not a recommendation. It's only education. So just to wrap up, you can see that the market is at all-time high. It's a breakout mode, right? So it's a spelling mistake. More breakout mode, right? So that breakout happened after long consolidation. So Bank Nifty is yet to catch up with the Nifty. That is the reality. So overall buyers continue to be bullishness, and Fyers are not selling is a very good optimistic thing that makes us even more bullish. But Bank Nifty, why is it consolidating and not really breaking out and catching up and clearing its immediate resistances is a concern, right? And so overall the market feeling is that of a clear bullishness, but so corrections, when it has run up so much, the corrections can come in when we least expect that. Also something that you have to keep in mind. But overall, bias bullish clearly. So India VIX is the only concern that is at a very low level and remains there. It spikes a little bit and then comes out. So that is creating a lot of problems with low premiums and very difficult to trade. And intraday trading is also tough because even at this very low level volatility, the V-shape moves and the spikes are very sporadic and tough to trade. You lose whatever you gained unless you put tight stops and clear price action is not followed. Positionally, it's trailing stop loss and continue to follow the trend, right? As long as the support zones are not broken clearly. So that is a view overall wrap up, and so please hit the like button if you like this and share it to maximum people. Also, just to let you know that there is a webinar free of cost that we are coming out with plan, but it will happen only if we have a targeted level of subscription. So Please share it to maximum people, and we will conduct this as soon as possible. It's absolutely free of cost, and it will cover 2 actionable tested option strategies, and that's at no cost. All you need to do is share this subscription link of YouTube to maximum number of people. That's all. So I hope it helps to design a trading plan for tomorrow, and also understand where we are in the market, what is the context of the market, and how we are, how we can uh, you know plan for a future trading. So if you know if that is the whole purpose of the session, if it helped, hit the like button and share, as I said before. Thanks for watching, and happy trading and happy learning.